Welcome to Chart Thoughts. Today I'm going to lay out a future trade potential that I see coming up on a specific chart. We're going to be looking at EVGO. Let me share my screen here real quick. So I'm going to start by breaking down the market structure again. I'm going to kind of start historically. So for many years, price was in this channel. At this point, we got a breakout retest of the structure, referring to the parallel downward sloping channel. We got an expression of liquidity. We fully expressed the liquidity of that channel, and then we came back to retest it here. At that point, we put in what I wouldn't call it speculative because we do have three touches, but at the point of the retest of the channel, it was just a second touch on this trend line. At this point, we've had multiple touches, so I now consider this trend line valid. So we had a trend change or a phase shift right at this point, confirmed in a sense at this point. Now we have a low, a higher high, a higher low, and eventually maybe looking for a higher high. We'll draw a couple more diagonals on here. You can see this was a similar breakout, although it wasn't a change in the structure. It was just a breakout of this diagonal downward sloping trend line. Came in, put a higher high. Arguably retested it here, but the thesis I'm about to lay out is potentially we'll see a retest of it about here. Drop to the daily here. You can see we have a gap here from when positive earnings led to a breakout of, however you want to draw this on. You could draw it like this. But we had this triangle right here. We had a condensing of volatility, springing, and then we got an expression of this as well. This might want to be more like this. I'll make it right that line. And we left a gap on that gap up during, when we had a positive earnings for whatever reason. Maybe there's news released. I'm not too sure. Pull up the RSI here real quick. See, we had a swing failure right here. Price came in, it held this support level. Gee, what I'm going to do is I'm going to kind of in a broadening structure at this point. We'll drop the center line on this structure real quick. Actually, let's use a ray. It will be a little cleaner on the chart. I'll just kind of get to the point here. What I'm looking at is the confluence of this diagonal trend line, this golden pocket, and this gap all meeting about here around 280, 290 to 305. I really like this area because it gives us a clear zone for risk management. I would use the bottom of this wick right here. Although you can play with this as much as you want. If you want to run it tight and wait till you and maybe just below the gap. We have gaps above to aim towards. You can see price most recently has come up and failed at the 200. We don't have any divergence on the weekly here. Zoom in real quick and see if we do have divergence across these two highs. So we expect some sort of a retracement. And you can see we lost the 50 on the daily. Maybe we're coming in to test across, test the 200. I'm sure there'll be upward oscillations along the way down. But for the lowest risk trade, I'm looking for an entry down here around the gap fill and this diagonal trend line. My targets are going to be, let's speculate with the fib real quick. Let's walk back on. I'll have multiple targets along the way. Center of this broadening formation we're looking at, which could possibly also come in for, you see that confluence between the bottom diagonal on that broadening structure meets that bottom trend line, right where that gap meets it. I call that X marks the spot. Sometimes price is magnetic towards those areas. So I'm looking at that. I'll be targeting, let's drop some text boxes on here. I'm going to lay out 4 targets here. Number 2 will be a gap fill. That fills at about 574. Number 3 will be a gap fill that fills at 737. And 4, it's a tough one. Let's look at a macro fib to come up with our target for this one. You can see the expression of the channel, the full expression of the liquidity of the channel took us up to a golden pocket on the macro. So I would be watching price around here at this next high that we haven't tested, this next high we came up and tested that golden pocket. You can see this first volatile move up took us to this high before putting in the divergent highs with what looks like 3 touches and a swing failure here on the daily up to the golden pocket. But I'll be looking for that 4th target anywhere around 1269 to the 786 at 1362. Although there is no saying where this will stop if we get up this high. So I'll definitely be following with a stop in order to let my winners run, mitigate that risk. Who knows if we get an 886 or an extension up to the 113. I could pull up some other charts that are similar in nature where you have this. Actually, let me just do that real quick. Let's pull up ASTS. As you can see here, you have a similar nature, similar behavior. Maybe we'll draw it like that. Got this downward sloping channel. Now it just blew off top right away and went straight to what looks like, is that a 1272 or a 113? Yeah, that's a 113. But the point I'm trying to make here is it is possible for these extensions to get hit, even if it doesn't seem like it down at $2. $40 sounds like a long way away, but it happens. I could show you a couple other charts. Can't think of them right off the top of my head, but so yeah, so this 4th target is, we'll be hitting these along the way and reassessing the trade as this plays out, if it plays out, but it will be anywhere from, actually, I guess anywhere from year to year is really where I'll be looking, but that one I'll just be following with a stop and using previous lows to, actually, I'll drop an example of what I mean by how I would manage my risk. All right, so you get the breakout, something like just picking lows along the way. and eventually I'll get stopped out, and then I can reassess from there. But that is my thesis for the coming months, weeks. Who knows how long it will take? My line suggests it might happen by December, second week of December, but I don't really go off the x-axis too much. Sometimes you do get these cross points where if I draw this channel in a bit better, there's a way you can draw this macro channel that I have drawn on my original chart, which I can switch to real quick here. Where you see, oops, it's a bit messy on here, but you can see that you got that X point, and that's no, this is a very speculative line before that low gets put in, but you can see that it stuff like that can happen where the x-axis is to some degree predictable, although that's a really tough one because who knows what the slope of this line is going to be before you have 2 points connecting it. But it could have been here, could have been anywhere, but either way, just wanted to make that point that sometimes there's these x-axis points can be not predicted but mapped out. Let's just check the risk on this trade. Even if you just take to that first target, it's a 10-1. If we do get even just this gap fill will be a 28-1. This would be a 43, and this would be ridiculous. If we get our extension, then we're absolute legends. I guess another way to look at this would be maybe like this, but I wouldn't want to hold for all that. If we break this diagonal, I just made thick and white, I'll be reassessing, waiting for this to find a new low. Maybe we'll have a reaction here or back down to all-time lows. I just really quickly want to drop a fib in here. Let's look at this fib, see how we're doing. And the golden pocket on this more macro fib from the all-time low to the golden pocket retrace also falls from 3 to 315. So that $3, 290 to 315 area is in a very curious area. We got a lot of confluence in that area. What I also want to do is let's draw what I call a liquidity box. I'm just going to draw this. I've been using them as gaps. Actually, we can just use this one on the chart here. And I'm going to drag this and we're just kind of looking at the significance of this zone. So there is some history in here. Resistance, lots of trading in there, a little bit of support right there. Resistance, but it did peek its head through to test that 200. Blew right through it there. Resistance. Resistance, resistance, resistance. Look at the gap perfectly above it. So it really likes to revisit this area. Actually, what we're going to do last is let's throw the VRVP on and take a look at the liquidity in that zone. That's to some degree what I just did, but this is a new chart layout, so let's see how my settings are. Let's make this 100. Yeah, you can see the 280 right here. Our point of control is 385, which you can see is an even more significant level. Look at that beauty. Beautiful. All that trade happening right there. Boom, boom. When we break through here, you get an acceleration or an impulse move. It's literally the our center line of this broadening structure is the VRVP on the macro most, from all of time chart, which is fascinating. So I wouldn't be surprised to see some sort of reaction off of that, maybe just a small upward oscillation, but yeah, 290. I guess it keeps changing because I have different parts of the chart on. Let's just look at it from the breakout point of the previous structure. Yeah, so that 290 area is where there's the liquidity increases, but there's a less liquidity in that 320 to 290 area, which is essentially where we're looking, and that is where that gap is. So that's probably what this is representing. But anyway, that is my future thesis for this, and I'm sure I'll revisit this one by the end of the year.